continues. Our colleague Nisha Poddar caught up with Nilesh Shah of Envision Capital and Ramesh of Kotak Investment Banking on what the factors are that are supporting the market momentum and what can be expected going forward. Take a look.
If you look at it from where the markets were in February, March, I think versus that, of course, it looks like a great run. But if you look at it from a one-year perspective, the markets are flat. I mean, a year back, we were at 8,500. Even now, we are 8,500. 18 months back, we were at 9,000. Versus that, we are at 8,500. So it depends on really how you're looking at it. But I think there are a whole bunch of factors which are driving this market. One is, of course, the big hope is that, yes, earnings will start to pick up, and the year FY17 will be that watershed year or a differential year where earnings get into double digit. And we believe that that's a very likely scenario. That's one. Two is there are expectations that the big reform of GST will happen very soon. Right. So that's an expectation. Third is, of course, a normal monsoon or even a better than a normal monsoon, which will drive rural demand and boost up consumption. And fourth is, of course, is a mini stimulus coming in the way of the 7th Pay Commission and the Europe areas, which happen around Diwali time or closer to the end of this calendar year. So there are a whole host of factors which are kind of, driving the market higher.
Many positives really at work right now. But what can really burst the bubble at this point? Because many critics say that the fundamental reasons do not reflect this kind of a euphoria. And the earnings have also been off to a weak start for this quarter. So what are the factors that could really pose challenges?
So, well, I mean, in the first place, I don't think there's a market-wide bubble. There could be pockets of exuberance, but I don't think there's a market-wide bubble. But I think one more factor which is driving this market is, of course, global liquidity and the fact that you have bond yields at negative levels or below zero in most part of the developed world, which is basically making liquidity go in for some of the riskier assets, and equities and commodities fall into that category, and that's also driving market. But I think the big risk is also the global events. I mean, that's a reality that we have been talking about, a US Fed rate hike or a China bubble bursting or the debt problems in China or Brexit manifesting itself in a more extended manner, the Eurozone weakness. I think, of course, there are a lot of global weaknesses which are there, which are right now getting cushioned by the global liquidity, which again is stemming from, bond yields at sub 0%. So I think what is a huge positive right now could also end up being a big negative, and so to say, in a way, punctuate this rally or put some brakes to this rally at this point of time. But otherwise, I think we seem to be on a pretty strong wicket.
So that's your view as well, Ramesh. What do you think about the markets? Because for the IPO boom to really continue, the markets need to sustain at these levels.
Yeah, I think we are not seeing any inherent or embedded risk to the market. But we must all understand that for the last few years, we live in a zone where overnight in a weekend, there can be a news which you had not anticipated, while the tremors may be known for some time. So we are positioning ourselves for that kind of a market. But structurally, Indian markets are a little expensive. That's known, and that's on the back of hope. And so I think there is no real structural worry or concern that we need to see. But India is always, the translation from macro to micro journey is a challenging one. So you will see these bumps. So it's a wave, and we have to ride the wave.
Okay, so that's a fairly optimistic view coming in. The mid-cap